Hi and welcome to our Market Insight for February 2017. I'm Aaron Upcroft. I'm here with Rob Gilmore.
Happy New Year, Aaron.
Happy New Year, Rob. Happy New Year to you all. Look, it's a fresh new year and it's always a good time at the start of the year to sort of take stock and really have a look and future plan for the next 12 months and think about those types of issues and topics that might be relevant both here and abroad. So how about we start with, or just talk about some of the top ones?
Yeah.
Interest rates. We hit the bottom yet?
Look, I think, like we were saying last year, I think we have hit the bottom of the interest rate curve. And interestingly, the Reserve Bank decided to hold rates at 1.5% this week. And while economists are divided in terms of what the next move is, my feeling is that it probably will be up. But the rates will stay low for a long time, and that next move may happen towards the end of this year or maybe early next year. But I think we've hit the bottom. And on your side, are you seeing that?
Yeah, look, I am, and the main thing that I've seen is that in December, lots of lenders started lifting their fixed rates. So the 5 and 3 year rates went up. There's still some really great rates out there, but there aren't too many lenders left. Obviously, the variable rates are still tied to the RBA a little bit, so there's a little bit of shifting there. But yeah, fixed rates are definitely on the move. So I agree. I think we're at the bottom of that cycle finally. Yeah.
And that's probably going to have an impact on the property market. What's your take on that?
Yeah, it will. Look, equally, I think we're hitting the top of the property market. We all know that it's been coming for a while. We're there. There haven't been any downward moves, and last time when this happened, last cycle, there wasn't much of a correction, but obviously in some areas will be affected more than others. What's your take?
Oh, look, there's a very clear relationship between property prices and interest rates, and interest rates have been going down for some time, and now we're starting to see that shift on interest rates, so that is going to have an impact on the property market. I think we are at the peak. Property might stay strong for some time. I suspect it will. I'm not looking for any type of crash, but I think we're probably at the peak of the market. And while it will stay strong, I think looking for growth over the next 5 years might be challenging. You still have to have that 20-year view in property in mind.
Agreed. And shares, probably logically the next one to talk about.
Yeah, look, interestingly, the share market both here and overseas got a real boost from the election of Donald Trump, which was very unpredictable. So share markets have performed well over the last few months. A lot of the back of potential increase in spending in the US. Companies are earning more money over there, so company earnings in this recent reporting season in the US are showing an increase over there, and the same is happening here in Australia. Companies are reporting increases in earnings, and though that is largely driven by a recovery in the resources sector, my view is I think that we probably will see a stronger share market towards the end of the year and a little bit more of an uptick in growth as well. So pretty positive.
Okay. And look, lots of our clients, myself included, like to travel overseas. What about the dollar and these markets and how they affect the dollar?
Look, trying to pick exchange rates is like going to the casino. But look, I mean, a couple of things on the Aussie dollar. Look, it has been persistently strong despite a lot of negative commentary, and look, that's basically down to the fundamental fact that we're now exporting more commodities, so our Aussie dollar is going to naturally be stronger now. However, we're seeing rises in interest rates in the US, and that's going to happen a lot faster than it is here in Australia. So expect that interest rate differential between here and the US to start to do the heavy lifting and push our dollar a bit lower. So my view is I think the dollar will be a bit lower by the end of the year, but certainly won't crash to some of the levels that are predicted.
Okay, great. What about other things that are around or maybe coming up? I mean, there's some super changes coming up, I believe. What about things like that?
There is a raft of super changes coming up. I mean, last year we were trying to work out what they might be. So they have all been passed, and 1 July is going to be a very important date. There are massive changes to superannuation that is going to affect anyone who has a super account, simply from the perspective of what you can get into super, how you can get into super, but also other things that you may not even think about in terms of your estate plan and how your superannuation might be left to younger children, for example. So it's really important to be all over that, and plus we've got a budget. Yep, and look, there's always a few surprises in a budget as well.
Yeah, you'd expect so. And what about surprises all around?
Talking about surprises.
What about surprises all around?
Yeah, I mean,
anything coming up?
Look, I think the year ahead, I mean, we had a lot of surprises last year. We had Brexit, we had Trump. Yeah. I think this year, I think it will be largely driven by a good Trump and a bad Trump. We're already starting to see that. He's come into office, and we're seeing the protectionist, anti-trade, type policies come through. But then we're going to potentially see the tax cuts coming through, the infrastructure spending. So I expect a lot of things will swing on what's coming from the United States, and it really is a fundamental shift in terms of how the administration over there is going to run things and the economy. So that's my view.
And Europe? Is there much in Europe or not?
There is a lot in Europe. There's elections coming up in France and Germany, and look, that could potentially cause instability in terms of EU, and we might get, you never know, we might see France trying to vote to leave the EU, and that would be quite huge. So there could be quite a few black swans out there.
Okay.
How about you?
Yeah. Oh, look, for me, it's mainly the top and bottom of those cycles, as we're talking about. The bottom of the interest rate cycle and the top of the property rate cycle. So they're going to have a big impact on what we do and how we do it. But, you know, we've been here before, and a lot of clients have been through these cycles before. But as you said, property and mortgages, they're always a medium to long-term view.
Yep.
And, we'll see them through.
And what should clients be doing?
Yeah, for us this year and for right now, it's all about client review time. Now that we're hitting that bottom of the cycle, we're definitely doing client reviews. So please be aware that we are going to be giving you a call to set up times to come and have a chat, even if it's over phone. What about on your side?
Oh, look, this month I've written an article on 7 of the biggest changes to super. So I'd encourage viewers to read that. And if you've got any questions or any concerns, definitely pick up the phone and give us a call and come in for a meeting.
Great. Well, that's our market insight for February 2017. We'll see you again next month.